Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. Lovely to be here with you on a Monday, a very busy Monday in terms of the geopolitical context in which markets are operating. 2nd of March, let's get you across what you need to know. And first, starting with a market picture. So here's what it looks like in Australia. We've managed to really climb out of negative territory to a large degree as we've moved toward the close. That's despite Israel striking Lebanon following some Hezbollah attacks. So that widening of the Iranian conflict still ongoing, oil surging, and stocks around the region having a hard time. I guess what is saving our market from itself really is the exposure that we have to metals, primarily gold. If you look at Northern Star, up by 5%, Evolution 6.5%, the big miners are doing well, and the energy sector along with consumer staples. So really helping to lift this market, which is now outperforming some of its regional peers. But look, it's a very uncertain environment. We don't know exactly what the end game is here when it comes to Iran. I mean, we've heard the US President Donald Trump calling on Iranians to stand up and to take control of their country in the wake of Khamenei's death. However, very high stakes, very uncertain, as I say. We're seeing Chinese stocks pretty steady. Hong Kong dropping. We've got pressure coming through on the travel sectors, not just here in Australia, but around the region as well. So plenty still to be digested by markets. And of course, US markets have not yet reacted to what has been going on in Iran. We've had E-minis under pressure throughout the day today. Israeli Prime Minister Benjamin Netanyahu vowing to intensify those airstrikes against Iraq. The US President Donald Trump saying he will be talking to Iranian leaders following the death of the Supreme Leader Ayatollah Ali Khamenei. So earlier, the US President gave an update from the White House on what he has dubbed Operation Epic Fury, outlining developments and addressing reported casualties.
We have hit hundreds of targets in Iran, including Revolutionary Guard facilities, Iranian air defense systems. They could have done something 2 weeks ago, but they just couldn't get there. Earlier today, CENTCOM shared the news that 3 U.S. military service members have been killed in action. As one nation, we grieve for the true American patriots who have made the ultimate sacrifice for our nation, even as we continue the righteous mission for which they gave their lives. We pray for the full recovery of the wounded and send our immense love and eternal gratitude to the families of the fallen. And sadly, there will likely be more.
So obviously the overarching theme is the seemingly wartime footing of the US and Israel in terms of what's going on in Iran. So we have seen the ASX suffering throughout the session, but picking up some steam heading into the close because of our exposure, as I said, to some of the precious metals complex and metals complex in particular. We're just getting reports from Reuters citing witnesses on the ground that there have been loud blasts being heard in Dubai because, of course, for the first time, some of these other Middle Eastern countries have fallen victim to bombing from Iran, including Dubai, the UAE, and the like. So we are keeping a very close eye on this. We've got the UAE's Jebel Ali port, trading and operations there have resumed. And we're talking about oil as well in that context. No big surprise to see energy stocks lifting significantly. Price of oil on the rise. The Strait of Hormuz closed. Not just oil and LNG that goes through there. Timely reminder coming from CBA's Dennis Vashensky, who points out that, again, we've got fertilizer, we've got wheat, canola, cattle, pulses as well, all coming through. that very important shipping lane. Defense stocks, look, we had seen some more significant gains earlier in the session for some of those defense names, but still a good day for DroneShield. EOS also up significantly. And as I mentioned, travel stocks not looking crash hot. We've had real threats to airspace in the Middle East, and so we've seen Qantas down at one time as much as 7%, but looks like it'll close down by about 4.5%. You've got to think as well that the market is still digesting some of the information that we got from reporting season. Look, the banks down. We're seeing the Australian dollar come under pressure. Risk off is the general vibe out there. Now, I did mention Electro Optic Systems. Obviously, it's getting a boost from the current Middle East conflict, which it says will increase opportunities. It bedded down 2 new orders, though, as well. Ample gained as the ACCC narrowed its takeover concerns. The oil price also, you have to think, supporting that. We've got Magellan looking like it's going to be merging with Barrenjoey, valuing Barrenjoey at just over 1.6 billion. Linus having a good day. It's renewed its Malaysian license. And Web Travel's CFO has withdrawn his resignation, reversing an announcement he made back in November. Let's get all the market moves with David Scott. He's joining us from StoneX. Scotty, welcome. So talk to us about the day, how it unfolded across this Asian region, but particular in Australia itself.
Honestly, there's no real surprise in the market reaction. We saw the biggest move straight out of the gate today upon the opening of Globex futures around the world. And then we've been dribbling lower, then trying to seek out liquidity in all these markets. We've got the initial sticker shock, but then how do you price the various outcomes? And right now, that's going to be the $1 trillion question, because no one knows exactly how this is going to play out. At the moment, markets are treating this like it's a volatility event rather than a big fat tail event, but that is where the risk clearly lies.
Okay, so what are the signs that the market is not yet treating it as a fat tail risk?
So just so the initial gap higher. So crude futures absolutely surged out of the gate. We saw gold hit fresh highs immediately after they reopened, and then it just dribbled lower. And this is just looking at our WTI contract. And I've just circled there in red. That's basically a geopolitical event between Israel and Iran that happened midway through last year. And you can see that particular point, that line in the sand was $75. It traded through it on multiple different occasions, but never managed to close above it. Again today, bang, hit that level, and then it's got rejected straight off the bat. So to me, if you're trying to go and reassess as to how things have been looking at the moment, how markets are assessing that risk, for me, if you're looking at the crude market, a really big breakout above 75 and a close above that level would really start ringing alarm bells that this is becoming much more serious than what currently volatility measures and what markets risk assets are pricing.
We don't know, though. As you mentioned, it's very uncertain. We have reports that Donald Trump himself, the U.S. president, saying that he will be looking to speak with Iranian officials. So could this be yet, it sounds crude to say it, but, another sort of taco trade that, go in guns blazing, but eventually will come to a table? I mean, the art of the deals type stuff.
Yeah, it's not crude in the slightest. It's 100% no. You can see that mindset because markets have learned over time to go and trade it that way. But this is a little bit of different kettle of fish. And I saw another headline that came out. Of course, very fluid situation. This is from an Iranian official who's still alive at this point in time, saying that they've got no inclination whatsoever to negotiate with the United States. So at face value, that pushes back against that right now. So yeah, it's a difficult environment. At this moment, you can't really assess. Now, we're seeing lots of different headlines coming out at the moment. You mentioned some of those other attacks, Dubai, lots of explosions around the region. There was even a British airbase attacked overnight in Cyprus. So you can see where the risk is of drawing other parties into this particular conflict. And that's, again, where this question is going to be lying. How big a risk event is this truly going to be?
Well, only time will tell. So we're watching gold. We're watching, the usual suspects, oil as well. We're watching U.S. futures coming under a bit of pressure today. But, Scotty, it doesn't change the sort of overarching thematics, does it? AI dominance, where the real tests of that narrative will be, whether it be in software. But we're also starting to really see expressions of devastation really for white collar workers. I mean, when does that become a concern for markets?
Yes, Block's announcement last Thursday, I think it was, and we got to react to it on Friday. It was pretty instructive, of course, slashing 40% of the workforce, and the share price surged. Now, when you go and look at that, I know that a lot of boards around the world are probably looking at that reaction function, saying, well, if we can go and provide efficiencies by laying off headcount, that's going to be how we're rewarded as well. And if enough think the same way, then it becomes self-fulfilling, and you get that erosion effect of economic activity. Demand will likely dry up, even with the impact that's coming through from some of those positives from investment. And at the moment, just looking around some of the signals in the bond market, which I know you like, that I like to go and look at very closely, they're not quite ringing alarm bells, but they're certainly saying that this outperformance that we're seeing from cyclical assets, the ASX 200 included, it's not on its last legs, but it's looking vulnerable at this point in time. It is definitely saying that a growth slowdown of some form is taking shape.
Okay, so again, if we're using that, how do we determine between signal and noise, Scotty?
Well, I think later on this week, it does run the risk of being a lot more noise again, but we start to get a lot of heavy hitting economic data. In the States, of course, payrolls on Friday, a whole bunch of economic indicators related to the labour market beforehand. And I think that markets, they're being distracted, understandably, by what's happened over the weekend. But that's what the concerns were before the weekend. That and what was going on in the private credit space, which is a slow burn as well. So to me, that's going to be really important. If we start to go and compound these geopolitical concerns on top of concerns about economic activity and what's going on in the real economy, then all of a sudden you can get a really nasty kind of backdrop. Again, we're not at that point, but I think markets are going to be really hypersensitive to those growth reads and those labour market reads later on this week.
Okay, so given all that, what sort of moves are you making as a trader?
Right now, I've got no qualms about it. I'm telling people to go and ask at the moment, instructing some of the members of the team that it's not a bad time at this point to go and start taking some money off the table and putting to cash. When I look at the cyclical part of the asset world, have really outperformed this year, and it's been really strong and probably defied where we sit fundamentally. And then in the other stage, you've got what's going on in the growth areas, which are looking very toppy. Nvidia couldn't rally last week despite blowout earnings. And then you put that into the mix, and where does the growth leadership come from? And that's what makes me a little bit concerned. Would I be willing to go and sacrifice maybe 2, 3, 4% upside to go and protect about a 20% down draw? Absolutely, in this environment. It makes sense to me at this point.
Well, Scotty, I'll leave it there. Look, I know you're watching the screens as we are here, hoping for some sort of a resolution to come quickly. Thank you so much for joining us, as always.
Yes, sir.
And I only say that because, of course, markets do not like uncertainty. Of course, there are opportunities in such a conflict. And, we speak about everything through a market lens here at AusBiz, but we are also cognizant of the fact that there have been U.S. Americans killed and also those civilians on the ground in Iran. So, oil has just been the topic of the day, hasn't it? The stock of the day was crude energy. With the Middle Eastern conflict in mind, it's one of the best performers on the 200. Kai Chen from MPC Markets and David Lane from Ord Minnett weighed in.
We've got a buy recommendation on Karoon. Their PE ratio for this financial year is about 13 times, but based on our forecasts, gets down to about 7 times next year, because there is an expectation that they will dramatically increase their production and increase their profitability. As I mentioned, it's important that they've not only growing their revenue base, but they have done a very, very good job of reducing their cost base. So from a profit and loss point of view, they're highly leveraged to the increasing oil price.
Hopefully this is a short campaign, but it's really hard to see, because if they do actually end up choking off the Strait of Hormuz, that's about 25% of the world's oil supply. I don't know if it go up to $120, but that would be incredibly bad for the economy if oil prices go up there. But yeah, I think if we see a prolonged blockade at that strait, we're going to see oil prices higher. Having said that, I'll be fairly dynamic. It's not a for sure thing, because if there's de-escalation, we will see some of this come out of the oil stocks. So, I'd be very dynamic in my positioning here.
To the point of how
ready to take profit. So I'd be, if you're on it already,
yep.
I'd be selling on the way up, just in case, because these things turn around very quick. If there's de-escalation, these prices will come back down.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
I think it's really important to note that we're seeing some pressure coming through on U.S. futures, E-minis, NASDAQ and S&P 500 E-minis, down by about 1%. And so we're keeping a very close eye on what we can expect here. We've got European markets opening. Futures had been coming under pressure. Keep an eye trained on what goes on through the overnight and any announcements that come on the geopolitical front in particular. Interesting to note that our market looks as if it's going to be closing into positive territory. I'll revisit that in just one moment after we take a look at some of the leaders today. Our stock of the day, crude energy, was exactly that in percentage terms. Resolute mining, so we've got gold being expressed here, DroneShield as well as Genesis Minerals, and Ora Banda, I should say. But look, I've also got Santos, Evolution, Woodside, so you don't have to go very far down that list to get some of those big energy and gold plays as well. Some of the laggards, though, Mesoblast, look, in the biotech space, I dare say there's a bit of wash up still in the wake of reporting season. We had Jefferies cutting Mesoblast's price target by more than 8%, close to 9% to $3.20 per share today. Zipco, it was sold off heavily on the day that it reported, down a further 9% today. Light and Wonder Sight and Mind. You can see that the growth story not doing very well today here locally. And Web Travel Group, we heard that the CFO has withdrawn his or her, sorry, I don't know, resignation in November, so a bit of instability there. Here's a look at some of those companies in the small to mid cap space that did outperform and look no further than SDI, up by a punchy 45%. Those, though, that did underperform the market, you can see Bapcor emergency cap raising in the wake of its results, and that's a quote from Scott Phillips, Motley Fool, and Mayfield down by 10.5% to $2.65. What a story Bapcor is. So disappointing for investors. ECB President Christine Lagarde speaks. Of course, it's International Women's Day tomorrow. She's speaking at an event that's being hosted by the ECB. And importantly, we get the U.S. ISM manufacturing PMI, so a little look into the state of the U.S. economy. Tomorrow here, we hear from Governor Bullock, the RBA Governor Michelle Bullock at the AFR's Business Summit. We get building approvals in terms of data. It's a pretty volatile number, as you know, but it is expected to lift in January after easing in December. We'll also have earnings trickling in from Life 360, Capstone Copper, and NextGen Energy. So, yeah, really interesting that's the SIBO Australia Index. It did not have the benefit of the next, 12 minutes or so as prices settled on the S&P ASX 200, which ended up just marginally in positive territory at 9,201 points, up 0.03%. So pretty incredible. We've got oil rising, lifting the energy sector, gold price rising, lifting the gold sector, and iron ore as well, looking a bit more positive. And the big miners did come to the party today. So fascinating setup for that overnight session. We'll be watching for any headlines coming out of the U.S. We do know that Israel has hit targets in Lebanon. The U.S. President Donald Trump says that he will be willing and open and plans to speak with Iranian officials. I do hope you have a good night. Stay healthy, stay happy, and we'll see you tomorrow morning.